Here at the conference in Lausanne, I've been talking to investors about the resources sector and why, despite it being a very unloved sector for many years, I think it's reaching the point where it's starting to look more interesting. I think the talk has been received reasonably well because there's quite strong valuation support for the sector now. We've been in a period of falling commodity prices for 3 or 4 years and constant earnings downgrades, which clearly hasn't been good for investors in the space. But now we've reached a point where I think that the commodity prices are close to support levels and we should start to see stabilisation of earnings. And combined with relatively low valuations, I think for the patient contrarian investor, it's starting to look more interesting. I think the most interesting question that people have asked is really, what's the timing? Do I need to invest now, or can I wait a little while? And to be perfectly honest, that's always the most difficult question to answer. I certainly don't expect to see a dramatic increase in commodity prices in the short term. But I think even if we see a period of stability and of companies just hitting the earnings forecasts that are expected, that will help to reduce some of the discount that we're currently seeing in the share prices. So, for example, the mining companies now are trading at about 1 standard deviation below what would be their long-term average PEs, if you like, for within the sector, but also at maybe 1 standard deviation below what you would expect for the broader market. So I think that represents the valuation proposition. When it turns around, I think comes to when the world has a little bit more confidence in the global economic outlook. But it's fair to say that I think a period of stability would be good for everyone's confidence and should be good for a re-rating in this space. I think that we invest in both mining and energy, and I think that the relative valuation in the mining sector has become much more interesting in the last 6 months and is increasingly attracting more of our fund. So, the previous 3 years we were in an earnings downgrade cycle because we could see the commodity prices, the spot prices, were lower than consensus. So it was obvious that we were going to have earnings downgrades for the miners, whereas the energy space tends to be a lot more stable than mining. So we've actually been overweight the energy sector during that downdraft, but now I think we're at a point where there are really good opportunities emerging, particularly in some of the smaller and mid-cap names, where they've been hit very hard by an extended period of not being able to access equity markets, finding it very difficult to attract debt. And because we can inject capital into companies and we can take it from places like the energy part of the portfolio, we can put more to work in the mining space now, and I think it offers better relative returns.